Tesla's short interest has just hit a 1-year high. And the last time this happened, Tesla stock proceeded to rally over $100 from this current moment that we're at. Short sellers did indeed cover on their short positions the last time this happened, and Tesla's stock did very well. This kind of opened up the door to ask myself the question, what do I think is coming next for Tesla stock? See, there's a lot of different moving parts going on with Tesla right now. You've had really bad earnings for a long time. Delivery expectations are in a weird place. Wall Street expects over 470,000 deliveries. Retail's down here at like 430, 420. What could that do for Tesla? Is that going to be a big negative catalyst? Is it not? And according to a new CNBC survey, basically all the money managers and hedge funds that were polled in this survey expect the markets to go through a correction soon. What would happen to Tesla stock if we did go into a correction? I have all of this for you and much more here in this video. But first, hit the like button and subscribe to the channel. It's free 99. It costs you absolutely nothing to do so, and you help push this video out to someone that probably needs to hear this information, because judging off of the StockTwits sentiment barometer for Tesla, it seems like even retail investors are like perma bears right now. Even when we get really good news, it's not changing the psyche of retail investors. And maybe some news shouldn't, some news maybe should. Retail's just not reacting at all. I think everyone's in this state of bearishness that can be very challenging. It can cause you to overlook when changes and pivots are happening in a company, in which I think that's happening right now. And first up, we have delivery numbers coming out on April 2nd. Now, there's a lot of various opinions here, and I'm kind of in the middle. Wall Street expects the average analyst consensus number for Q1 deliveries is about 474,000 or so. You're not going to hit that number. You're not even likely to come close to that number in relative terms. I believe we're going to be around 445 to 450,000 deliveries. That's my expectation. Some other individuals are as low as 420. Gordon Johnson, well-known Tesla bear at this point, he's sitting at about 406,000 deliveries. Expectations are all over the place. So what will that likely do to Tesla stock? Well, if you come in above 420, if you're just higher than last year's number, I think the stock will get a quote-unquote pass for that, as Gary Black said, because they're starting to ramp the Cybertruck. The Model 3 refresh apparently was very slow to ramping in California, in Fremont. And you also did have that arson attack outside of Giga Berlin that shut down the factory for almost 2 weeks. So it's not a Tesla specific issue, potentially the reason if they miss on their deliveries. Maybe it was just circumstances that were outside of Tesla's control. So actually on April 2nd, I'm not expecting the markets to have a big sell down or even a huge rally on Tesla deliveries. If Tesla does come in, above 450,000, I think the stock will probably rally, even though you miss analyst expectations if you come in less than 474,000. So anything 450 or higher, I think the stock can go up. Anything that's around 420, I think there's probably a good chance that you may fall. Anything between 420 and 470 or so, 474 is likely to be good, right? As long as it's not terrible. As long as you're not like sub 400,000 or like 410,000, a negative year-over-year number, I think Tesla stock should do just fine. So alongside my expectations, 445,000 to 450,000, you should have a positive day. The day after Tesla's Q1 deliveries are announced. So I actually don't think that is a big negative catalyst here on the near-term horizon. We also have Tesla's earnings coming on April 17th. Sounds like a while from now, but it's really only like 4 trading weeks, like 3 actual weeks before we get those earnings. And I think that is where we can get even larger upside, potentially getting some shorts that start to get squeezed out of their short positions. And I'll give you the full breakdown of my expectations, what could be announced, what I think is going to be said or announced, and how that could affect Tesla stock here in just a moment. But to my surprise, most of the markets that were polled by the CNBC survey, most of the big money managers, are not expecting much upside from here. They're actually expecting a pullback or a correction. And I think a broader market correction is probably the biggest known catalyst right now that could cause stocks to fall. Now, before we actually look at this survey, you do have some data coming out tomorrow morning that I should mention. You have GDP growth rates, quarter over quarter, final estimates for Q4. What's actually interesting here is the last number that we had was 4.9%. You're expecting a revision down to 3.2%. That's a 1.7% reduction in the GDP for Q4. At least based on current expectations. If that comes in even lower than 3.2%, you might start to get people that say, hey, how long can this economy stay good? Are we at the end of this cyclical cycle in the economy? Are we heading into a slowdown or some kind of recessionary period? And it really just depends where that number comes out as. 3.2% is obviously still a good number, but let's say you come in at the low twos or mid twos, then you start to kind of question how good the economy is going to be and for how long. Are earnings estimates too high if the economy does get weak from here? Probably. Tomorrow morning, you also get initial jobless claims. At some point, these are likely to spike, and when they do spike, you might get some fear in the markets. Not necessarily expecting that to happen tomorrow, but Wall Street is expecting a small little spike here to about 215,000 claims. You are going to get the Chicago PMI that is expected to rise from 44 last month to 46. Final numbers for Michigan consumer sentiment for the month of March, and pending home sales month over month and year over year for February. Lots of other smaller data as well, but that's pretty much it. And then on Friday, what's actually interesting is we get our big data. Core PCE month over month, personal spending month over month, and personal income month over month, as well as a speech from Fed Jerome Powell, but markets will be closed on Friday, and we'll just have to react to that coming on Monday. I don't know if that could mean maybe we get a larger move, maybe we get a smaller move. Not too often do we get big data like that, like huge data on a day where the markets are closed. I can't recall the last time that's happened, so I really don't have too strong of an opinion on what it will do to start next week, but it will likely have some impact. Are any of these data points going to be the reason why markets pull back? I'm not exactly sure. Now, what you've seen today was you've seen this end of the market face ripper rally in the NASDAQ. I mean, this was pretty much vertical here towards the end of the day today, just basically straight up. The triple Qs went up $3 in the last hour or so of trading. That's kind of ridiculous. Now, a lot of these weird moves that we are seeing in the markets the last couple of days, including yesterday and today. Yesterday was a sell-off into the close. Today was a rally into the close. A lot of this is portfolio rebalancing. Quarter end portfolio rebalancing from money managers. Now, the thing that I really want to point out is where the money is going, because here on the day today, you really seen the Russell, your small cap, interest rate sensitive names, outperforming big time. The Russell was up almost 2%, including this rise you've seen towards the end of the day today. The NASDAQ was up 0.5%. So the Russell 3x outperformed the NASDAQ. Because what's happened is there has been a lot of under allocation to small cap and interest rate sensitive names. Big tech has worked very well. And if you are mandated to follow a specific, threshold, let's say you track the S&P, you have a percent in small caps, a percent other places. Just imagine this for me. Small caps. They didn't do well in Q1. So maybe your mandate's 4% in small caps. Maybe it's now down to 3% because small cap underperformed. Maybe your S&P 500, weighting is, I'm just going to throw a number out there, 50%. Well, in Q1, the S&P is up almost 10%. So maybe that turned into 75%. So you got to reduce some S&P, buy some Russell just to get back to where your, benchmark disclosure, there's a specific word, but like disclosures to your investors on where you're going to be allocating the capital. So a lot of weird movements in the markets are happening the last couple of days, and tomorrow's probably going to be the biggest of all. But again, if you notice, it's your interest rate sensitive names. It is your small cap stocks that are getting the rotation today, where money is going into them. And some money is obviously leaving the NASDAQ to do so. And that brings me to the first point. If we go into a correction, that would obviously be healthy for the markets. But just listen to the word correction. Correction means to correct something. Small cap stocks, let's say Tesla, Fubo, SoFi, all these stocks that have not done well in 2024, that are down year to date, they don't need a correction. Can you get sympathy sell-offs if the markets fall? Of course. But I think without some kind of big news, big catalyst, something negative that happens in our markets, you may get a correction away from big tech, investors selling big tech, and going into interest rate sensitive, quality companies. It wouldn't surprise me. And you could see quite a correction based on that alone, given just how overweight the S&P and the NASDAQ are in your big tech names. So a correction necessarily, when people say a correction, may not mean downside for Tesla. It may not mean downside for stocks that have already seen a lot of downside in 2024. It may just mean more downside in the best performers, right? The stocks that have really been carrying the way higher, and maybe, a little bit of stabilization in stocks like Tesla and other small cap names. So when you start to hear correction this, correction that, think what actually needs to be corrected. Of course, depends why you're going through a correction. That's important. Is the Fed super hawkish? Is the economy crumbling? Like what's going on? That context is very important. But without any bad news, I think you might get a correction in just some of the areas that have run too much. With that said, take a look at this headline of this article on CNBC. It says, a majority of investors believe a stock market pullback is near, according to a CNBC survey. It says a majority of respondents, 61% in the latest CNBC delivering Alpha stock survey, believe the broader market has run too far, too fast heading into the second quarter, and a pullback is near. That's because the S&P is up 9% this quarter, which would be its best start to any year since 2019. However, just 39% think there's more room to run. So even money managers that are most of the time going to benefit from a bull market and stocks continuing to rise, even those investors are like, hey, we should probably see a pullback at some point here. Like, we're overdue for one. At this point, we would likely welcome some kind of pullback. So here in the very near term, over the next 3-4 weeks or so, I think a market-wide correction is the biggest risk that we have to our markets right now. Delivery numbers probably going to get a pass by Wall Street. It's possible that they just come in really, really light, and Wall Street, sells Tesla stock off based on that. But I think you just need to be watching for a generalized correction. That could start tomorrow. That could start on Friday. That could start any time now. But when Wall Street is at the point where they're like, yeah, this market has run too much, it's a matter of time before you get a correction. Now, Tesla's earnings, I think that is really the big catalyst that could send the stock much higher from here. Now, if you're looking at Tesla on a technical basis, this trend line has served to be very important, and it showed that today, where you bounced off of this and the low of the day was $176 per share. You bounced right at this trend line, retraced to the upside. This is a very healthy looking bullish candlestick that we've seen today. Now, as I said, when Tesla was back here on March 22nd, March 25th, I said if we got above this trend line, you're likely going to about 188. So I'm not going to change that now. I think Tesla still has, $8 or so of upside from here, at least in the short term, until we get your delivery numbers, which in all reality, I mean, my birthday's on April 1st. So that's going to be on Friday. Delivery numbers. Well, no, that's going to be on Monday. Delivery numbers should be coming out on Tuesday. So maybe you can still see a upside move from here in Tesla stock solely based on the technicals. That would fill this gap down that you've seen back here on March 4th. Earnings is where you could see shorts really get into a bit of a problem. And I'm going to say this as simply as I know how to, without getting too far in depth, because I don't really think you need to understand this. Tesla stock has dropped in between 9 and 10% 4 earnings in a row, like clockwork. So what happens? Well, we're heading into our 5th earnings, and everyone's expectations are going to be Tesla stock is going to fall another 9 to 10%. You're going to hear a lot of bears start to come out heading into Tesla earnings, and that's the popular thing to do, because statistically, what are the odds of a company the size of Tesla dropping 10% after earnings, 4 earnings in a row? That's got to be pretty low. I mean, I've never heard of a streak like that. Eventually, expectations get so low that you get an upside surprise. And I think expectations are very, very low for Tesla. After all, like I said, if you look at StockTwits and 65% of investors are bearish right now, and those are retail, just imagine hedge funds and institutions, probably 80% of those investors are likely also bearish. So basically everyone's bearish. That's the popular opinion. And I think the risk is that Tesla actually surprises to the upside. Now, I don't think the earnings themselves, I don't think the margins themselves are necessarily going to be exciting. There's 2 things that I think could really get Tesla stock moving from here. Number 1, it's profitability increasing. Tesla really becoming more profitable. Right now, EPS estimates are about $3.07 for Tesla in 2024. Well, they're a little bit higher than that, like 10 cents or so higher than that, following yesterday's announcement of FSD trials going out to people. So EPS estimates actually rose yesterday, and that's why Tesla stock broke above this trend line that I previously mentioned here in the video. But nonetheless, expectations are still very low. For context, Tesla did over $4 of EPS in 2023. So you're expecting negative year-over-year EPS numbers. I think Tesla's going to come in with a big upside surprise there. Question is, does Tesla give you official guidance for profitability increasing, or do they just say, like, nonchalantly on the earnings call, which this is how I imagine it'll go? Elon might just say, we're going to take the approach of not worrying about selling as many cars or volume growth, and we're going to focus more on profitability to really power our investments going ahead and put a main central focus on AI and developing full self-driving. Boom. That is a home run. Profitability increasing probably sends Tesla stock up 10%, or the guidance of that. So that's number 1. Number 2 would be the commentary around FSD and the Robotaxi network. We've seen today, and I reported to you guys in the last video. If you have not seen it, check it out. But you got basically the holy grail of good news today. Tesla is now looking to hire somebody to do the software interface and help design, well, not design the vehicle itself necessarily, but the software behind a fully autonomous Robotaxi network, or a fully autonomous platform vehicle. So that is well on its way. If we get any kind of guidance from Elon, again, I expect it would be nonchalantly on the earnings call, like, in the next 12 to 24 months, we could start deploying robotaxis, most likely. Anything along those lines will change the dynamic for the robotaxi network. For years now, for basically ever since Tesla started working on FSD to begin with, Wall Street has considered that like a, Hail Mary kind of, don't count on it kind of segment of Tesla's business. if Elon and the Tesla team, they come out and they show a lot of confidence about a robotaxi network coming, then you have to start thinking about that, especially if Tesla and the Elon team were to say, like, we're probably 12 to 24 months away, something along those lines. I think that's another huge catalyst that is not priced into Tesla stock at all. And if it's coming relatively soon, let's say the rollout starts in about 2 years, I think the stock would need to price some of that in ahead of time. Obviously not all of it, but price some of that in. And what you're looking at there is potentially 50% gross margins, 40 to 45% net margins, I would imagine. You're talking about hundreds of millions of dollars, potentially billions of dollars every quarter in robotaxi revenue in just the next couple of years. That will have a huge impact on EPS. That is the whole deal, the whole shebang for Tesla. And I do think you get very positive commentary around that as well. And, you know, right now, I think it's important to make this video because nobody's really expecting that. Everyone is just so used to being bearish on Tesla for the last, couple of months that a lot of people are not even considering any kind of upside surprise or what, Elon and the Tesla team may say. So just to be clear, I'm more confident in the profitability aspect, that would have a big impact right now on Tesla stock. I think if Elon and the Tesla team come out definitively and give guidance for the robotaxi network, like we expect it to launch in 2026 or something, then that would definitely have a big impact on Tesla stock as well. To get more definitive kind of guidelines, I'm not as confident that we will get that part, though. There's going to be a lot of good talk about FSD, but I just don't know if they're going to speculate on the robotaxi just yet. But if they do, that's huge. And if I am correct and Tesla's earnings are a positive catalyst and sends Tesla stock higher, then it's a really bad time for the shorts. Short activity in Tesla just hit the highest level it has seen in the past 12 months. At 3.7% sold short, you have 102.5 million shares that are currently sold short in Tesla, worth about $18.22 billion. And that's at Tesla stock at, 180. If Tesla stock starts to rally from here, the losses shorts are going to take are going to be extreme. Okay. Last time you were 3.7% sold short was on June 1st. If we take a look at the chart, what happened following June? Well, you really started to see the rally in April, and then it started to go pretty just vertical. And then by June 1st, what started to happen? Tesla stock had a 1.76% positive day on June 1st. On June 2nd, Tesla was up 3%. Day after that, Tesla was up almost 2%. Day after that, Tesla was up almost 2% again. And then another 1.5%, and then a 4.5% move, and then a 4% move, and then a 3.5% move. You get the idea. Last time you were this sold short in Tesla, you had like 10 green days back to back, and short sellers started covering, essentially getting squeezed out of their short position. What happened? You can actually see it reflected in the data. Short sellers almost instantly started to cover, right? The short interest fell down to about 3.2% within the course of just the next 2 weeks following that. And that was just a small amount of shorts covering on their short positions. I don't know what is going to definitively be said or announced on Tesla's earnings, but if either one of those two things happens, specifically around profitability, I think you could see a massive short squeeze in Tesla stock, because there is so many shares that are currently sold short. And I mean, when you're looking at Tesla stock and just seeing what it's done to start 2024, going from $265 per share down to, $160, up to where we are at about $180, a lot of this drop has just been due to expectations falling, profitability or EPS expectations falling, as well as volume expectations coming down. And I think if profitability is, expected to rise more than expected, you could see quite a huge rally in Tesla. Mix in their shorts covering, and I think you could get back above 250, especially, in the near term, as long as nothing crazy happens in the markets, no correction event. Jerome Powell's not uber hawkish or PCE's not terrible. I believe we have a new CPI report coming out towards April 10th, 11th, or 12th. Around there is usually when the CPI reports come out. So as long as nothing were to break and, get worse for the markets, then I think you could be set up in a very favorable way heading into Tesla's earnings. Now, I hope I'm wrong here. If you want to get Tesla stock at cheaper prices, if I'm correct, that's probably the last time you'll ever be able to buy Tesla at these kind of prices. Unless, again, we get some unforecastable event that happens again, which doesn't look too likely to me. If not, if Tesla really does what I think they will, Tesla may not be, sub $200 again for a long time. So honestly, I hope I'm wrong, and I hope the stock stays where it is or even falls from here. I would love to buy shares at cheaper prices. As you guys know, I'm looking to put a ton of money into Tesla, and the longer I have to do that, the better off. I don't want to go all in on one, certain day, and maybe the next day, the stock falls more, right? You want to average into a large position. And yeah, I think we might be in for quite an upside surprise here in the coming weeks. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest every day. If you guys want to come trade with us as well, live in real time, every time I make trades, I send out alerts. Check out the link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.